Hello traders and welcome back once again to It's Crypto's trading channel. In this video, I'm going to make an update on the current situation we are currently seeing on DUSKUSDT because Dusk has been rallying recently. I'm sure some of you are aware. We managed to capitalize on a lot of the moves to the upside. We decided to day trade Dusk rather than buy and hold. We were going in and out of the market following the trend. So let's just recap what we have here from Dusk USDT from a multi-time frame price action perspective. Starting here on the monthly time frame. So on the monthly time frame, what we can see is a very large impulse to the upside, which has broke above this level of resistance and this level of resistance. During this impulse to the upside, the market printed this W formation. Very easy to see. W formation here. Generally speaking, when the market prints this pattern, what you can expect is the market to complete the pattern at the neckline. One important factor that we have to take into consideration is we do have this level of resistance here, so the market could not possibly make a retracement exactly to this zone. It could reject at this resistance, so we have to identify this area. So we have two areas of previous resistance which will act as support all across this zone. If we bring up our RSI, we can see that the weekly time frame is overextended and overbought here, and we can expect a retracement back to bring down RSI levels back to normal. So we are oversold on the RSI, we have an impulse and we expect a correction, and we also have a W formation. So this is a lot of bearish confluence in the short term, and I do expect the market to make a deeper correction into this area of support, also into this area of liquidity. Now, as you all know, when the market pumps, makes a very large move to the upside, retail traders tend to enter positions here, which is very bad to do. We should be entering positions as we did in our VIP group with students. We entered positions all during this rally to the upside and capitalized on this move. We've now closed our longs as we are expecting this corrective move to this area of liquidity. So let's show you guys what we are expecting and how we can be potentially capitalizing on this opportunity. As I was saying, we expect this corrective move. If we take our Fibonacci from the low to the high of the recent monthly impulse, we can see that the market has currently retraced to 0.382, but we have yet hit the 0.5 and the 0.618, and I do expect the market to come down and hit this area. So let's just draw in a zone here between the 0.5, the 50% fib, and the 0.618. And this area will act as a nice level of support and a magnet for the price. The price will highly likely, come down and test this area, maybe even to the neckline of the W formation I've already spoken about, and then make the continuation to the upside. So this is what I'm expecting. We could see an accumulation here, and then we will see the continuation to the upside occur. So our trading plan here is relatively simple. We'll be waiting for the market to come into this area of demand before we will be looking at adding this asset to our spot holdings. Let's drop down to the weekly time frame and see what we can see here on the weekly. So on the weekly time frame, we are also overextended and we expect a pullback. On RSI, we are also overbought here. So relatively the same as the monthly time frame. I do expect this continuation to this retracement, to the downside to occur. If we drop down to the daily time frame, this is where things get a little bit more interesting. Sorry, my scale is on the wrong side for some strange reason. So here on the daily time frame, this is where we can see that the market is now ready to make the retracement. How do we know this? Well, because the market saw multiple rejections at this high and then formed this M formation. So you can clearly see this double top, this M formation here, and the market has broke below this level of support. So you have previous resistance here, which was acting as support here. The market has now broke it to the downside. During this break to the downside, we have this M formation. Now what we can expect is the market to complete this M formation at the neckline and form a new lower high. So you have a higher high, a lower high, and a new lower high. Now this confirms my theory that we are going to see a monthly and weekly retracement because we have broken bullish structure on the daily time frame. And this tells me that all time frames are now aligning for a bearish correction into this area of demand, into this area of liquidity. So what we will be waiting to do, we'll be waiting for the market to complete this M formation at the neckline, and then come down into our area of demand, and this is where we will be looking at entering positions. I wanted to make this video just to save some of you from entering bad trades due to FOMO here. If you didn't catch this move to the upside, we did manage to catch this move to the upside multiple times here. So the first position we entered was exactly here. When the market formed this inverted head and shoulders formation, we had the fake out to the downside, break back above. Now, on the retracement, we always buy on the retracement. We are pullback traders. We have a clear uptrend. We bought every dip here. So let's just quickly run through what we had. We had this impulse that broke above this level of resistance, followed by a correction to retest previous resistance as new support, also in confluence with the 0.618 Fibonacci, and we entered a long position here and capitalized on this move to the upside, which brought us around 70% spot profit, I believe. Let's just double check that one. Okay, a little bit more. I think we closed sooner than that. So around 80 to 100% spot profit on this move to the upside. We then closed our position and waited patiently for a correction. So how do we know when to enter the next position? Well, very easy. We had previous resistance here, which clearly should act as support. As you can expect, we have previous resistance. We expected it to act as support at this zone. We took our Fibonacci from the low to high of the next daily impulse. And we can see that the market once again tested exactly the 0.618, and this is where we entered a long position and capitalized on this impulsive move to the upside. Then most recently, the final move that we capitalized on was this move here to the upside. The market made this impulse to the upside here from this low to this high. Now, during this impulsive move, the market printed one red candle. So during a bullish move, we have one bearish candle. And as you know, if you follow our videos, when the market forms a bearish candle inside of a bullish move, you can expect this candle to act as a level of support. And that's exactly what the market did here. This candle acted as a level of support. The market made an impulse correction, tested this zone, and then made the continuation to the upside. So we had 3 separate entries here. All of them were absolutely perfect on spot. We capitalized on this move to the upside here, this move to the upside here, and then finally, the last move that which we recently capitalized on to the upside here, and we did actually close this one a little early at around 30-40%. It did overextend, but never mind. Nonetheless, sorry, we capitalized on all 3 of these swing lows. So we have swing low, swing low, swing low. But now what we can see is a change of structure. Now, this is very important. Do not enter long positions now. Now it's just a matter of remaining patient and waiting for the market to make a weekly retracement. So we're going to come into this area of resistance, which I've just identified across this zone. So you have resistance across this zone. We're going to come into it and begin a new downtrend on the daily time frame, something like this, and come into this area of weekly support here. Now, all inside of this area, around the 0.4, around the 40 cent mark is where we will be looking at loading up our spot positions here. Looking at re-entering our spot positions here. We are fully out of this trade for now. So yeah, as always, trading is reactive, not predictive. We will be waiting patiently for the market to come into this area, and then we will obviously wait to see confirmations before we enter the position. When the market does come into this area of demand, it is highly likely that we see some fake outs to the downside to trap bears and to shake out investors that bought here. So if you bought here and the market comes all the way down, which is probably around about a 50% drop, you're likely to be scared and you're probably going to exit your positions here, which is the complete backwards way of doing things. So, as always, we'll be waiting to see what the market does all inside of this area to capitalize on the potential continuation to the upside.